Hello everyone, this is the lecture for the auditing section of Accounting 203. The first item that you see on your page is three diagrams that provide some information as to what we mean by a audit. And in a very general way, what an auditor does is compares something to a set of criteria that explain or define what that something should be doing, and based on the comparison, the auditor issues a report that goes to some group or individuals, third parties, that are interested in knowing about whether or not the activity meets the stated criteria. So for example, the most common, or one of the most common types of audits, is an audit of financial statements. And so what the auditor would do is compare the activity reported in the financial statements to generally accepted accounting principles, and once the auditor is finished with that comparison, the auditor would issue a report indicating whether or not the financial statements are in accordance with GAAP. And we'll look at an example of that in just a minute. So financial statements are pretty big things, right? There's cash, receivables, inventory, fixed assets. You know what all those items are. So what happens in a financial statement audit is that the financial statements are broken down and they're audited component by component. So for example, an auditor who's interested in knowing whether or not accounts receivable are correctly stated in the financial statements, that auditor would go to the codification, to the ASC 310 section, and in there the auditor would find the accounting for accounts receivable, compare what the receivables are, compare how the receivables are reported to the GAAP, and then that gets included in the report. So as an example, I went to the SEC's website and I looked up Microsoft's 10K. Microsoft has a June 30th year end, so the latest 10K was for June 30th, 2015. Right, the 2016 one won't be available till later this summer. In that 10K, I found balance sheets for the year ended June 30th, 2015 and 2014. I found income statements for 3 years, 2015, 14, 13, and the same 3 years for the statement of cash flows, the statement of stockholders' equity, and many pages of footnotes. So I'm going to scroll down a little bit, and on the bottom of page 2 here you can see I looked up in the proxy statement that the audit of Microsoft's financial statements cost the company $35,622,000. So that's a lot of money, right? The audit was done by Deloitte & Touche, one of the big 4 accounting firms, and this is basically what you get at the end of a financial statement audit. It's a report addressed to the board of directors and the stockholders of Microsoft. The first paragraph basically explains what they audited. So they audited 2 years of the balance sheets and 3 years of income, cash flows, and stockholders' equity. The second paragraph talks about the kind of work that the auditor did, and in the third paragraph we have the auditor's opinion, and what they're saying is that the financial statements are in conformity with accounting principles generally accepted in the United States. So we would call this an unqualified opinion, a clean opinion, a good opinion. It's telling us everything is okay. And since Microsoft is a public company, they're subject to the Sarbanes-Oxley Act, and so they also have to have their internal control audited. And so this audit report has a fourth paragraph which gives a opinion on the company's internal controls. The last line here, I can see the word unqualified opinion, so that's saying Deloitte and Touche did not have any problems with their internal controls. So a lot of work went into preparing this document. On page 3, there's some information about different kinds of audits. So what defines an audit would be the person doing the audit and the type of audit work that is done. The example I just spoke about, the audit of financial statements, is done by an external auditor, or sometimes the word independent auditor is done. So Deloitte and Touche or any CPA firm, they're not employees of the company. They're hired to give an opinion on the financial statements or the internal control. And their opinion is valued because if management told you the financial statements are okay, you'd have some concerns since management is an employee, management is biased. So when we have someone who's not an employee of the company come and look at the financial statements, we are in better position to rely on their report. Who can do external audits or independent audits is governed by state laws. State laws say that this person must be a CPA. So the path, as you well know, for CPA is 150 hours. But among other things, what that CPA license does is gives the person a sole opportunity to be the one to do audits of financial statements. The second broad group of internal auditors we often hear about are known as internal auditors. These people are employees of the company, and their work, I'm going to highlight this, is much broader than the work done by an external auditor. They can look at financial statements, but quite honestly, they have the opportunity to look at all operations of the company. So since many organizations are very large and there's not an infinite number of internal auditors, they meaning internal auditors, have to make decisions about what kind of areas they're going to audit. So often they look at areas, what we would call the greatest risk, right? This could be an area that's very large in terms of dollars, and so company would want to make sure things are working okay. This could be an area where some new system was implemented, and so when changes occur, that's when problems are likely to happen. So the company may want to have the auditors take a look at the operation of the new system to make sure it goes okay. The example that I used on page 1 to describe what an audit is also works for internal auditors. So for example, if an internal auditor was going to look at a computer network, the internal auditor would have to have some information on internal control guidelines in order to assess the operation of the computer network. If the internal auditor was charged at looking at practices maybe for hiring new employees, the company would have to have some kind of guidelines and practices and policies and procedures that they follow, right, for acquiring new employees. So the internal auditor's job would be to provide assurance that the way new employees are hired is consistent with the company's hiring practices and policies. Kind of a third area where audit work happens is with the Internal Revenue Service. This organization is responsible for the enforcement of compliance with tax law, And what many people do every year is file a tax return. There is a internal revenue code. There are internal revenue code regulations that help implement the code. And so if a auditor for the IRS is going to audit a tax return, the auditor would want to make sure that what is reported on the tax return is consistent with the Internal Revenue Code. So for example, when we do the IRS research next week, we'll, for example, look up the definition of income and what can be excluded from income. And so if something is missing from the tax return that fits the definition of income, that should or could come up in the audit. And one more organization I'm going to mention is the GAO, and I'm going to click on this link here to bring up their website. They are a government watchdog. If I click on the About box here, you can see that they are often called the Congressional Watchdog. They investigate how the federal government spends taxpayer dollars. And so when I click in this box that shows their reports, we can see some examples of the types of things they look at. Critical defense materials, real property, the Patient Protection and Affordable Care Act, something to do with private health insurance, aviation forecasting, Department of Homeland Security, Indian Affairs, unmanned aerial systems, right? So there's many kinds of audits that are done. Social Security, disability, something to do with that. U.S. Secret Service data analysis could be better. Data analysis could better inform the domestic field office's structure. So there's a wide range of activities that involve the spending of federal dollars that the GAO audits. So you'll see in this outline that with each section I have an indication of a certain number of questions. When you come to class on Tuesday or Thursday, you can expect 2 questions on something to do with the different kinds of audits as explained here. The next area we're going to look at is whether or not audits are required. And so if you are or work for a public company where you file with the SEC or are listed on a major stock exchange, you must have a CPA audit your financial statements annually. And in addition to that, because of the Sarbanes-Oxley Act, most public companies also have CPAs audit their internal controls. Now, there's no federal law that says you have to have an internal audit department, but for public companies that are listed on major exchanges, such as the New York Stock Exchange or the NASDAQ Stock Exchange, those stock exchanges have requirements for internal audit departments. Internal auditors, right, are viewed as one way to improve internal control by having employees of the company do risk assessments and audits of areas that are high risk. And so as a listing requirement, the stock exchanges want good internal controls, which often means having an internal audit department. Now, if you're a private company, right, not listed on a stock exchange, not filing with the SEC, both internal and external audits are optional. Sometimes there's a third party that may require an audit to be done. For example, a private company may have a loan with a bank, and so as part of the bank's requirement for lending money, they would want an auditor to audit the financial statements and certify their compliance with GAAP. So what we have here, right, is some background about different types of auditors and our audits required. The next section on the top of page 4 governs the audit process. So a person who's doing the comparison between something and the criteria does not just show up and start doing the audit based on what they think would be the best way to approach it. Depending upon the type of audit that you're doing, there are professional organizations that issue standards that provide guidance for how audits should be done. So for example, when I click on the link for the Institute of Internal Auditors, this is the world's largest professional organization for internal auditors, and they have a wide variety of standards that governs how internal audit should be done. So the link here brings us to them. We're not going to go through all of them. One thing I'd just like to point out here in the middle of this page is notice the Institute of Internal Auditors standards are written in many languages. So internal auditors that are members of the IIA, which is quite a few, they're around the world, and they have the auditing standards available in their language. The next link is for the American Institute of CPAs. They are a professional organization we've talked about a couple times, and one of the things that they do is issue auditing standards that have to be or should be followed by auditors of non-public companies. So we're waiting for the web page to come up here. And that's not good. I'm going to try again by copying and pasting it. Here we go. So when they issue a document, it's called Statements on Auditing Standards. And as I scroll down here, you can see we're up to number 121. So there's been many standards that are issued and that are available to the public. Some of these other standards that are issued, right, you see listed up here, came out later, and they are eventually released to the public. What we're going to do is not rely on the AICPA's presentation of the standards. We'll be able to access these through the library database like we've done with other databases. A third group of standards is issued by an organization called the Public Company Accounting Oversight Board, or sometimes they're just known by their initials as PCAOB. And you can see here that they have auditing standards. The PCAOB, right, it tells us here, was created by the Sarbanes-Oxley Act. These standards are for audits done of public companies. So if we were to go back to the Microsoft audit report, in the second paragraph it says we conducted our audits in accordance with the standards of the Public Company Accounting Oversight Board. So whatever Deloitte and Touche did had to be in compliance with the auditing standards that we see here. And then the last list, right, since audits are done around the world, and there are many companies that, or excuse me, many countries that do not have their own body to write auditing standards. There is a international organization that writes auditing standards, and they're available for countries to adopt. And I guess the goal is that the auditing standards, just like the accounting standards used around the world, can eventually become consistent, and then as business and commerce is being conducted, it's a lot simpler when the reporting and auditing is all done in one format. So here's a link on a new audit report, and they've got some additional links here that talk about the organization of the report and the criteria needed to be met before a report is issued. Rest assured that the standards are pretty complete for international organizations. So again, be aware of the 4 organizations mentioned here, who they are, and what type of standards that they issue. What you would find in those standards, if we looked through them, would be 4 really broad sets of ideas. First one talks about competencies and skills of an auditor. So for example, they're all going to mention that auditors must be independent. If the auditor has some connection to the financial statements or the activity being audited, that's going to raise questions about the auditor's report, because people might think the auditor is biased. Additionally, an auditor must be competent, and so what kinds of skills are needed to conduct an audit? Those are discussed in the standards. And then these next 3 bullets that you see here talk about planning, executing, and reporting for an audit. So for example, how do you make a decision about what to audit? In the case of financial statements, a organization would be more likely to misstate an account that is based on judgment rather than facts. So for example, auditors will probably spend more time auditing the allowance for uncollectible accounts receivable, because that is very subjective, whereas perhaps something like depreciation expense, which is based on fixed assets that you can see, and well-known formulas like straight line, it's more likely an organization would misstate accounts receivable, allowance for doubtful accounts and accounts receivable, rather than fixed asset depreciation. So once you've decided what to audit, the auditing standards often then talk about how to execute the audit. And so what is needed to obtain evidence? What is good evidence of compliance with standards? What kind of review of work must be done in order to make sure that the right conclusions are met? So it's not unusual for an auditor to complete a analysis, to prepare some type of memo or other documentation to describe what was done, and then to have it reviewed and proofread by a more senior auditor to make sure everything is complete. And then when the audit's done, there's a lot of guidance on how to issue reports. What do you say when no problems are found? What do you say if problems are found? The example that we looked at above of the Microsoft report was an indication where there were no problems found. The financial statements were in compliance with GAAP. So thinking about all the things that an auditor has to do, this area here talks about what kind of research would an auditor need to do. So some of the research could focus on the thing being audited. For example, I'm listing here 3 different industries: a casino, a hotel, or a bank. And all of those, right, operate in very different ways. A casino makes money by gaming. A bank makes money by either lending or investing. And a hotel makes its money in a variety of ways, right? By lending rooms, by banquet rooms, by selling food and beverages. And so if you're going to audit a casino or a hotel or a bank, but you don't have a good idea about how those operate or specific transactions within those organizations operate, you'd have to do some research. And then you also have to do research on the criteria. And so, for example, we might be looking for ideas about laws and regulations, best practices, or accounting standards. And so that can be found, for example, in the codification if we were looking for accounting standards. And then in the middle here, right, we are going to look for examples of how to conduct the audit. We could go to auditing standards or other types of guidance. And then depending upon if problems occur or we don't find any problems, there's a wide variety of reports that have to be issued. So any of the elements in the diagram are very, very ripe for research. A lot of times when an audit is done, the auditor will prepare a program. And so one way to better understand how to audit something is to go and get programs that people have written which describe audit steps for typical areas. So this AuditNet is a website that provides a wide variety of audit programs. It's actually run by a guy who started this as a hobby and then kind of turned it into a business. And so you see the menu on the left. There's a lot of things this person provides, but when I look at this page here, I can see he's got 255 pages of audit programs. And so if you wanted to have an idea of how something is audited, you could go and look things up here. The basic ones are free. The premium ones are available if you want to become a subscriber. And then there's an organization that's pretty good called Knowledge Leader, or excuse me, their website is called Knowledge Leader. The name of the company is known as Protivity, and they aren't an accounting firm. They're a professional services organization who works to help internal auditors do a better job. And so, for example, once again, if I was looking for some type of audit program, I could follow their menu, and you can see that we have a big list here of topics. And if I wanted to get into one of those, it's going to ask me to log in, and They actually give you a free 30-day subscription for auditing related classes. We can actually obtain free subscriptions for students, and this gives us a way to get to a wide variety of professional resources. So that's some information about the kinds of research that we would do as a auditor. One thing in terms of a closing question, Bradley, a couple months ago, recently had a new president come on board. Your final task is to search the Bradley website for the president's page. What is the name of the new president? Or as you read his bio, you will note he's an attorney, and there is a particular type of law that he specialized in, has developed a reputation, a national reputation for being excellent at that. So as kind of a way of better understanding what's going on here, that's your final task. So that concludes the introductory lecture for auditing. I'm going to upload the video, but before doing that, I'm going to modify this document for each section. I'm going to put in there the timestamp where you could find that. So if you wanted to review a particular part, you can go right to that time section. So thank you very much. I look forward to seeing you in class on either Tuesday or Thursday.